Today is February 7th. There's a couple of videos and webinars that I've done in January. Not too many, but I think lots of good information. If you haven't seen those, I would definitely recommend that you take a look. A lot to learn there. And I think you'll enjoy learning about the markets and how I look at them and trade them. What you're seeing here is the trade scalper method, and the software gives you the signals. Now, if you have any questions after actually going through all of the videos or this webinar, you can email me. Just to let you know, I get a lot of email. I try to answer the trading-related questions myself. I have a small staff that helps with the licensing, with activation, with setting people up with NinjaTrader. And if you need help with that, or need help in getting the live data feed, just email me. I'll see if I can set that up for you and help you. We do remote support all the time, so we have a nice staff here that can help you get set up. Now, before we start, I want to get the disclosures out of the way. Trading is risky. Please don't trade with funds or money that you can't afford to lose. You can lose a lot of money, you can make a lot of money, you can make no money, you can make millions of dollars, but in reality, it's not the way it should be. Really, you have to practice, you have to know the risks involved, ask your broker. I don't want anybody to think that this is overnight success. It's not the case. You definitely have to understand and learn everything involved with trading before jumping in. So please don't make the mistake a lot of people do, is that they jump in without understanding and learning as much as possible, because I don't want anybody to lose money unnecessarily. I want to see you guys be successful. So just take your time and learn it correctly. I've discussed for a number of years the January effect. I call it the January effect. And while I have here the chart, we'll look at the Atlas line, we'll look at a few different methods, see if there's anything here worth trading. But I want to cover what's happening with the current environment as we get into the 2017 trading year. I'm going to put here a daily chart just to show you here. And the daily chart is basically showing that the month of January closed higher than where it opened. Not by much, but it still closed higher. So if you're looking at the month of January starting on the 2nd or the 3rd here officially, and then closing here, this is what we have: the starting price of the month of January and the closing price of January. Now, this is what I call the January effect, and this is very important because statistically you can expect the year to go higher, close higher, move higher. Not that it's going to go up directly in a straight run, but at the end of the year in December, the market should be higher. Now, why this is important is because if you think about the hedge funds and the money markets and everyone who's really involved in managing the E-mini S&P, they look at this as a guide. Now, when you trade with other people's money, you buy and you hold. For us, whether it be for our own accounts or as day traders, we have to play it safer, and we have to look at this in a different way to take advantage of each time the market moves higher or has an opportunity to move higher. We can jump in. So don't hold a trade, meaning go long today or tomorrow or yesterday, and then withstand all the ups and downs until December, because market could go down 100 points, and that's a lot for anyone. So that's not what I want. What I want you to see and do is look for the optimal opportunities. And I also believe that trading less and trading more accurately works in your favor. Instead of trading, everything 100 times a day, all you're doing is making your broker rich. And I know the brokers hate when I say that, but it's the truth. I don't want you guys to just trade and trade less, trade more accurate. And each time you enter into the market, just remember you're subjecting yourself to risk. So make sure that the trade that you're taking has the smallest amount of risk. Now, these are things that I teach and I go over, overbought, oversold, making sure you're not the last guy or gal buying or selling into the market. You want to make sure that each setup actually has enough potential to get where it needs to go. And that's why I look at the ATR, I look at if the market's overbought, oversold, I look at the opportunities not to trade at the end of the day or right in the beginning of the day, of the session, let's say. So all these things, even though they may be common sense, you have to understand them and know them. Now, each time the market throughout this year, 2017, retraces, pulls back, not by a little, but by something that is significant. I like to say 4 candles, 5 candles. It has to be something worthwhile where you see the market actually retracing and going down. You have an opportunity. Now, the opportunity is going to be for you to go long, not when the market goes down, but when the market begins to turn around and go higher. I'll show you the Atlas line in a little bit, Oli, okay? I'll show you the market shortly, or the Atlas line shortly. So you have an opportunity for the market to retrace and head back up. And one thing that I want everyone to know is that markets love to test where they have previously traded, where they've previously been. And I expect the market, if it does retrace back, it's probably going to happen in March. Seasonally, that's when it happens. In March, there's going to be a big retracement, pullback of some sort, 100 points, 200 points. But when it does begin to turn around and come back, this is your golden opportunity. This is the opportunity, and I'll probably have a webinar and explain to you exactly the timing. Timing is everything, when to go long. But I want you to understand this and learn this on your own. When the market begins to head back higher to test where it's previously been, right now, these are the highs, right? So it's going to want to test these highs. If these are going to stay where they are, you have this opportunity. Now, where you enter is very important. How do you know to enter here or here or here? Well, typically, I wait until the market makes a retracement of 50% back up after it's surpassed its 50% marker. I'll show you how I do that. That's when I think the opportunity is to go long. So let's say that you have 5, 10 days, 20 days of the market retracing and pulling back. So let's say that sometime in March, you're going to see the market begin to do this. Okay. Now, 1 day, 2 days is meaningless, but 5 days, 6 days, a good move, automatically put this on your radar to go long when the market begins to climb back up. So I like to look at 50% retracement back up. Now there's a tool here called the Fibonacci retracement tool. I don't use Fibonacci values, so don't get excited. There's not going to be any Fibonacci teaching that I do or that I show you. I'm just using this tool to help me look at very specifically 50%. And when the market turns and breaks this 50% above what it happened to retrace and now turning around and coming back up, that's my opportunity. Now, this could be a day trade, this could be a swing trade, a position trade. My goal is to see the market head back up to test where the highs have been. Now sometimes, and I want you to go back in history, test it, you're going to see how accurate it's going to be in history, but sometimes it doesn't quite get to the exact high. Sometimes it misses it by a few points. Well, even though this may be the goal, you can absolutely take what I consider the best profit target. It's the only target that I think is worth taking before deciding to trail a stop, trail a target to make a little bit more, is looking at the current conditions. So please add to your charts a very important tool. I teach this exclusively in the programs that I have to offer using the ATR right here, average true range, a setting of 4. I'm adding this to my chart. Even though it's a daily chart, I still use this on a 5-minute chart when day trading, or a 1-minute chart when scalping. And what I want to do is I want to look at the market at the current conditions that it breaks, whether it be 10 points, 13 points, 20 points. It doesn't matter. It's relative. Whatever that value happens to be, I can already predict very accurately what the market's going to do. Well, if the market's right now at 13 points, I can expect the market to move 13 points up or down from where we are. So wherever this candle happens to be and break and head back up, your target, if it's not the testing of the highest high of the year where it's previously been, if it's not that, at least know that you can make 1 times the ATR. That's typically a good chunk of change. It could be 10 points. It could be 15 points. What's normal is about 15 to 20 points. That's normal on the daily E-mini S&P movement. So you have a very specific target that you can make, and then once it breaks that, you can then trail a stop. I have tons of videos on how to trail a target, trail a stop that you could learn from, and you can then go and check out, you know, a little bit extra target. Now, once that makes, for example, and tests this high, wait, because this happens throughout the year multiple times. Wait until the market does it again, but the key factor here is breaking and making new highs, and then maybe a couple weeks later, again, 4, 5, 6 days of retracement, and then starts to come back up, do it again. Once it breaks the midpoint by a few points, you're long, testing where the new highs have already been. Now, if I'm going too fast for some of the new traders, I'm not sure if anybody's new here. I'm sorry, not to say anything, but you have to learn this somehow. You have to dive in and learn it. And if you want to start from the beginning as a beginner trader, then the mentorship program is the best way, because I take it nice and slow and start from the beginning. So when you look at taking it long, stock market, NASDAQ, Dow, Russell, E-mini, it's all the same. We're testing the highs. I want you to look at the opportunity of 1 times the ATR, which is, in my opinion, the best underutilized tool that exists when trading. Any questions for me on this? You guys okay? Kurt, Kenny, Liz, Margaret, Mathis, TT? All right. I've also, just, you know, the last couple of webinars I've done, the room has been locked out because there's so many people. So I've extended the room limit here for this webinar, so you shouldn't have a problem with that. David, good. Greg, okay. Okay, very good. All right, now when I look at this here, David, ATR at 4 rather than the default of 14, correct. You're going to update that. And in NinjaTrader, if you're using NinjaTrader, every charting platform has that. So when you do use this, my recommendation is to right click, and if you right click here in this box after you update it to the setting of 4, click set default, and that way it'll remember. That way you don't have to constantly do it. Liz, so you always have the average true range on your chart, whether it's a 5-minute chart. You know, it's included in most charting platforms, so it's nothing you pay for. You always have it on your chart, so you always understand the current conditions, always. Great, Francis. Glad to hear from you. All right, Liz, so this specific strategy here, when looking at the year as a whole, okay? When you look at the year as a whole, because the first month of the year closed higher than where it opened, January started here, closed here, what I can expect is the year to move higher, but it doesn't move higher in a straight line. What I want to do is I want to wait until there's a clear retracement before going up, before taking a long position. So wait until it happens. It could happen within the next couple of weeks. It could happen in March, June, but I know it happens a few times throughout the year. Wait until there's a few days that the market actually shows you that it's pulling back in retracement. So I created these bars here to show you the market retracing and going down 5 days, 6 days, 7 days, something very significant, not a small pullback. And then once it begins to turn around and head back up, actually trying to test these highs, here's your opportunity. Your opportunity now is to go long, not at any place, but long when it breaks the midpoint. So I use, as I mentioned, the Fibonacci retracements right here, and I uncheck all the Fibonacci values, and the only values that I'm using are the 0, the 100, and the 50. In that way, when the market does break the midpoint, that's my indication, the trigger in a sense, to go long and to take it back to test where the highs have previously been, whether it's a month ago or the most previous highs, right? The highest highs of all time. And typically the market will make it, will hit it and even continue through it. But I've also seen many times where it doesn't, where the market doesn't hit those highs. So you have at least 1 times the ATR as your goal. The goal being whatever the ATR happens to be, whether it's 15 points, 20 points, 30 points. I can show you plenty of examples where it made each time at least 1 times the ATR. Now, that's a big move. You are going to be surprised how fast it happens. And then from that point on, if you want to trail a stop, you could. And I also would never risk more than this value plus a few points. So you're not going to, you have to have a stop, obviously. You don't ever trade without stops, but you have to have a stop that's more than what the ATR is showing you. You want to be able to stay in this trade. Okay, now that's for a position trader, a swing trader. As a day trader, you can take a look at the Atlas line. When it breaks that day, that price, you know you're waiting for it. You can use the Atlas line. You can use something else to get you long and be out at the end of the day. Okay, Liz? So I like to use, and just to show you how I do it, if I click on this tool, I uncheck all the Fibonacci values. They sound great, look great, but I don't think they work. So I use this tool just to help me identify the 50% mark, 0, 150. And then right click in this area, manage template, save over the word default, and now each time you bring up this tool, it'll remember Liz wants to use the 50%. All right, Liz? Let me know if you're okay with that. Carol, Mike, MJ, everybody else, any questions for me? Liz, okay? All right. And if you have any questions, you guys can always email me. I get a lot of email, but I really try to get back to everyone. If it's a 3-page email, I'm sorry, I can't answer a 3-page email. It'll take forever. But if it's a quick email and something, I'll get to it. All right, Sam, still using the ATO. An oldie but goodie, right? I only, you probably bought that, Sam, when I was offering it standalone. Now I include it in the mentorship class. Yep. Excellent, Sam. Excellent. Very good. So let me just put this away here. So this is the scalper, the trade scalper, and you can see the signals. It's really straightforward. There's no mystery. I like to teach. There is never any type of mystery in what I'm doing. So when you have the trade scalper or the ATO or the Atlas line, you actually understand why, where, how, you're going long, short, the stops, and so on. And again, you can see that I have the ATR with a setting of 4, which is telling me the current conditions on a 1-minute chart is 1 point. So if you're going to take a trade on the scalper, it's got to be 2 ticks, 3 ticks. It's all dependent on the ATR. If this is slow, let's say it's under 2 ticks, honestly, it's not worth trading for a tick. Now, it's a little bit different when you look at a 5-minute chart. So let me just switch this to a 5-minute chart. Let me see if I have a chart open here. When I look at a 5-minute chart here, you can see the ATR is a little bit different. I'm going to add the Atlas line here, right there. And the Atlas line, you can have a sound file. I'll just put one in here right now. I don't know if you guys are going to hear it. This is a doorbell sound, which is included within the trader, but you can actually have any sound that you like. Has a filter, an ATR filter. It has text, bars back, and so on. Market open, I live in Florida, Eastern Standard Time, 9:30, and then you have the signals, bounce trades, tradable closes, pullback, strength trades. So now we're going to see a signal appear. I have really no idea where it's going to appear, but we're going to see it appear. I'll bring up my dome, and if it's a signal worth taking, let's take it. I'll take it. Let me just change my account here, and we'll use this account, and we'll go 10 contracts. And the ATR, remember, what I'm looking at, everybody, is the current conditions. Current conditions 1.7. I already know that my target should be roughly 1.7. So I round down, 6 ticks. The stop loss is double that. Initially, I call it a catastrophic stop. Now let's talk a little bit about stops. The stops that you should be trading with and using is not only a hard price or hard catastrophic stop. Okay, 22.93 quarters. So that's the entry on the Atlas line. So what I'm going to do is I'm going to make sure that it's not overbought. I look at this. I look at this. This is 2.75. This is roughly 3 if I double it. It's not overbought. It's a long trade. Let me bring up my dome. Keep it on top. And I'm going long.
Order filled.
All right. So there you go. Long trade. All right. Right there. Kenny, question. At the open strategy, still using gray. All right, Kenny. You guys have been around for a long time. Good. You know, I have NinjaTrader 8 indicators coming out. Anybody here is in mentorship and has been a mentorship student for the last couple of years, the upgrades are free. I don't charge. Liz, the long strategy here is the Atlas line. And the Atlas line is one of the indicators, software, one of the methods that I offer on DayTradeToWin. And so the software I have up, see Atlas line here, I have it up. It's telling me to go long. 22.93 quarter was the signal. And based on the current conditions, I can expect 6, 7 ticks. So I always look at the ATR to see what to expect. The ATM here strategy, this lower half here of the dome, can automatically put the stops and the targets for you. It's something that a lot of charting platforms now offer where you don't have to manually put the targets and the stops. So I had configured this prior because I saw what the current conditions were, so I didn't have to place and make mistakes placing the stop and the target. Now, if I go back to stops, for example, you know, a lot of traders say that a hard stop is the way to go. I have a different take on it. I think you should protect yourself like a bubble. The stops that you take need to be relevant to not just price, but to time, to proof, and also to some type of catastrophe. So I'm long, and let's say the market shoots straight down and goes to my stop. Well, that's because the market is so volatile, or there's news, or there's something that's happening where immediately my stop is hit. Great. I want to be out. I don't want to lose any more money than I have to, and it's relative. So the slower the market, the less of a stop that you use. The larger or the more volatile the market is moving, definitely you can look at a smaller stop working against you. You have to have a stop relative to the current conditions. David, you have a question? Go ahead. You don't have to raise your hand. Dave, you can go ahead and just type away. I'm looking at your questions here. So when you look at stops, just don't use one stop. Use a combination of stops to help you time, proof, and some type of last resort, which I call the catastrophic stop. As a package, you get so much more value joining it as a group than you do individually. The value is for price. You get it all as a bundle. Yeah, Dave. So the ATO is based off of an opening range breakout. So I'm looking at, and I'll add it. So if you want, I can add it here. You can take a look at it. ATO, right here, right there. And when I click OK here, you're going to see the at the open, which actually hasn't yet plotted for today. So as of right now, we don't have an ATO. But I can definitely show you a couple days ago the ATO. And everyone who has the at the open should have the same exact signals, right? Because it's not subjective, it's mechanical, which I think trading should be mechanical. And so here is the ATO. So this is yesterday, and I'm just going to remove the Atlas line for a minute. And so the ATO right here is saying to go long yesterday. Remember, it's an opening range breakout method. So it's telling me that the market wants to go higher, 22.89 quarter. So here specifically is the entry to go long, the ATO. I have stops, again, catastrophic stop, time-based stop. And if you think about what you can expect, look at, again, think about how important this is. Look at the current conditions. Current conditions tell me the market's at 7 ticks, 6 ticks, right? So what can I expect? I can expect the market to move 6 ticks, 7 ticks, right? You're out of the market here. That's the expectation. You're out. You're done. So once and done deal, either long or short. I don't want to go long again or short again. So the ATO, it's a once and done. It's a great method. Not perfect, right? Nothing's perfect, but it does capture most of the strong moves as the day begins. It's not always the first trade of the day. The Atlas line sometimes catches it first if it's a good move to the long side, and then the ATO kicks in. But nonetheless, it does what it's supposed to do. That's yesterday. So let me show you the day before that. So we can look at a few days in a row. I'm surprised you guys are asking about the ATO. I wasn't even planning on showing it to you today. I was looking at Atlas line and scalping, but here it is. Again, this is 2 days ago. This happens to be, let me just move this out of the way here, February 3rd. So February 3rd, here's the long, my 2 points, maybe even if you want to be conservative, 7 ticks. I can almost say that this went, 7 ticks. So that's the 3rd, and if you want to look at another day prior to that, here is the 2nd. And this is the 2nd, another long signal right here, right there. And now you're long here, right? Market went down a little bit. That's what the stops are there for. And then turned around and went up. And what did it move? 2.25. The ATR was at the time 2 points. So I want 2 points because that's what the ATR is telling me. And the market went 2.25. So the 2 points were achieved, I should say. All right. Great question. Greg says here, do I put a time limit on the trades before they expire? Okay, so we're talking now, we have to compare apples to apples, Greg. When you look at the open, think about what the at the open method is. It's an opening range breakout, which means everybody begins trading. You realize that it's moving in a direction. You want to take advantage of that. You want to jump in. Great. But if it happens in the afternoon, that's no longer the same thing that occurred or based off the morning. So you can't say that I'm still going long the at the open method 4 hours later or 5 hours later because it's completely irrelevant. So when it comes to the ATO, there's a time limit that it does become invalid. Okay. Now with the Atlas line, it's not the same thing. The Atlas line says go long here and now. This is the reason. So you should be immediately long or short. There's no waiting on it. With the at the open method, it has to happen within the first 2.5 hours. So it's a little different because the methods are different. So if it's a bounce trade on the Atlas line and you're going short or long at the moment, you want to be long or short at the moment. Same thing with the pullback and strength trades. For the ATO, you don't want to see that signal happen in the afternoon. So there is a time limit, but it depends on the type of method it happens to be, Greg. Now, all these things that you're asking, a lot of it is, and I teach very specifically in the mentorship class, or when you buy one of the programs, I go and we do a live training session with me, which I think is important. So you get to ask questions live. It's recorded. Everything I do is recorded. And I think the feedback that I've received is that the recordings are so important to review, because if you take a class and you want to review it or go over the details, you can't because it's not recorded. I record everything and I send you the login to access the recording. You can review it and then get back to me and ask the specific details and questions. Dave, you don't have to raise your hand, Dave. You can just go ahead and type in your question there. The Atlas line can be used on Renko bars. I would recommend NinjaTrader for that. I have to say, Ray, I'm not big on Renko bars, or I don't have a lot of experience trading Renko bars, but the Atlas line is based off of price, support, resistance. It's not moving averages or trend lines or MACDs or bands or channels. It's a little different. It's based off of price action. So yeah, it could be used on Renko candles. No problem, Dave. And you can email me, Dave, if you have any specific questions. I'll be happy to give me a ring. The ATO works for Forex, but you have to remember, Oli, for Forex, you have a spread, right? So you're starting already. Let me just go here to where the market is currently, and I'll add the Atlas line back. For Forex, you have a spread, so you're almost like behind the curve when you trade as a day trader, unless you're going for much more profit. So all I have to say is with Forex, you have to trade for a larger profit. The ATO works on a 5-minute chart, and therefore, if you're incorporating the slippage, or not really slippage, the spread with Forex, you may not have a lot there after it's all said and done. So you may want to instead look at what I call the power price action method, which you can use on hourly charts, daily charts, more of a swing trading, position trading type of method called the power price action. Oli. Excellent, Melissa. Melissa, are you in the mentorship class? Because I have a Melissa in the current mentorship class. I want to make sure you're the same Melissa. Great. So would you like to tell everyone what the good and the bad, right? How you like it? Because as a student, I like to get the feedback on what I teach, as well as your experience, the support. And if you'd like to share a little bit with everyone, I'm more than happy to have you say a few words. Carol, between 9:50 and 10 o'clock. So this distance, Carol, right here, you're referring to, how can this distance be adjusted? If that was your question from earlier, you can't adjust it. It is what it is based on the plotting. On the left side, Carol, let me take a quick look. The distance between here and here, Carol, from here and here, like this, like that. How do I adjust that? There's a couple of ways you can do it. One is by moving the chart, which is an option. The other option is in the settings itself, Carol. You would go, I believe it's, if I'm not mistaken, in properties, I believe. And in properties, you can say how many right side margin or left side margin, right side margin. I have mine set to 150, so it gives you a little space in the front. That's how I use it. And remember, any changes you make, right click, and actually not this, my mistake, set default. So any changes you make, set default so it remembers. So I think this may be what you're referring to. I like to have a little space between the edge of the chart and the candles. Over here, the double bar. Okay. So if you want to move this out of the way, you here on the Atlas line, you have a little bit of a bars back setting where you can say, I don't want to necessarily see the entry signal, the text, clogging up and plotting over the current candle. So you can offset it. So let's say you want to see it not 3 bars back, but maybe 5 bars back or 10 bars back. It doesn't change where you enter. Remember, the signal, the candle, the price, it is what it is. It's just where the text displays. And when I click on that, you're going to see that this offsets it. And if I want to offset it a little bit more, you can offset it a little bit more, 10 bars back. See, it's further away, but it does not change. This is still the entry candle. It's just where the text displays so it doesn't clutter your chart, Carol. That's one of, so there you have a couple of options. And if it's not something here that I've explained, just send an email. I'll have Chad go on your computer. He'll explain it to you remotely. All right, Melissa, thank you for that feedback. So everyone can see, here's a student, and I'm glad you're enjoying, Melissa, the program. Thank you. Appreciate that. questions on the Atlas line? I think there was a question, I forgot it was Oli Hales. How do you know if it's not, Oli says here, overbought against the Atlas line? Well, this is something I teach, but let me just tell you the rationale behind it. If you know the market's overbought or oversold, the chances of it continuing are not in your favor. You always want to enter closer to the Atlas line as opposed to further away. So when I look at the Atlas line plot, which is here, and I look at the signal, so if there was a signal here to go long or a signal here to go short, this distance, Oli, from here to here is very important, because if it happens to be more or higher than what the current market conditions are doing, it's not in your favor. You're actually already saying to yourself, this market has already moved the distance that I expected it to move. Now, in addition, I'm not just taking this 1 times the ATR, I'm actually doubling this. So if I look at the current signal, which is from here, 22.93, and I calculate the distance from here to here, it's 2 3/4 of a point. This, if I double this value, it's 3.5 points or 3 1/4 points. It's not more than double this value. If this entry, Oli, was way up here and it was more than double 1.78 or more than double 1 3/4, which is 3.5, I would say it's overbought. Don't take the trade. So in this case, it's not considered overbought, and you can take the trade. I want to stay away from situations that put me, as soon as the market gives me a signal that it's way above here, that's it. The move has already happened. It's done. I'm actually at a loss trying to take a trade that's going nowhere. And so anytime throughout the day, if it crosses below the Atlas line, I want to make sure, in this example, that it's not giving me an entry more than double whatever current conditions exist in comparison to my entry and the Atlas line, wherever that happens to be. So it's completely relative, not up in the air, always 1 point or always 2 points or always 3. It's not like that. It's what are the current conditions? Am I entering more than double those in comparison to the Atlas line plot? Make sense, Oli? Now, I'm going over this very fast because there's a lot to cover, but I teach this in great detail, even more so when you do take the classes, Oli. Okay? Oli says here, how are you drawing on to get the distance? I'm using Oli the Control F3, which is here in the drawing tools. You have here a ruler, and I use the shortcuts because I'm do this all day. So I use the ruler, and the ruler here, not that. The ruler lets me do this. See, like that. So that's what I'm using. It's part of NinjaTrader, has a ruler. That's what I'm using. Make sense, Oli? So I click here, I click wherever my entry is, and then I put it off to the side. So it's 3 clicks. Very simple. If you need NinjaTrader, Oli, let me know, email me. I'm happy to set you up with it. I can even include live data if you need it. Happy to set you up so you can start playing and practicing it with it before you decide to take the next step. Okay, NinjaTrader 8, yep. So I think it's the same, Control F3. I believe it's the same, or it should be. Fantastic, good. I have over, I don't know, 300, I lost count of the videos, and I do, as many videos as I can, but sometimes it's difficult. I can't do a video every day, obviously. I have classes, I have private mentorship, I have a group class that's 6 o'clock. I have my own trading that I do in the morning. So there's a few things that I am busy with. On top of that, the emails and supporting my clients. So I'm a pretty busy guy, but if you do have any questions, send them over. I'll try to get to you. Oh, that's right. So the time-based stop is 4 candles after I enter. So I wasn't even paying attention. Thanks, Bill, for letting me know. So when I look at this trade here, I actually look at entering, which would be here, and then 1, 2, 3, 4, and I'm out of the trade based off of the time limit of 4 candles. So I didn't make the profit. I'm closing out the position
Target
and I'm
filled.
finished, right? So thanks, Bill, for letting me know. The time-based stop is a way to really limit the amount of risk when you're in a trade. And let me just add here, this here. I'll show you the entries and the exits. So this is the entry here. This is my exit. Not a lot, 2 ticks. I wasn't paying attention, but 4 candles. Time-based stop is how I like to get out of the market, because an hour later, 2 hours later, it's just now hoping it's going to happen. I like to cut loose a trade if it doesn't make the full target. I can still make some money out of the trade. It could still be a small winner or even a small loser, which is fine, or break even. But I really don't want to hold on to a signal or a trade unnecessarily, hoping eventually it's going to make it. I entered for a reason. It didn't happen and make the full 1 times the ATR. I'm out. That's it. We'll look for the next setup. Now, you see these P's and these S's. These are more trades. Pullback, strength trade. It's all telling you long. They all have specific rules, stops, pivotal stops. I mean, it's all, based on the current signal, and they're all mechanically based rules on it. So when I do go the next trade, long or short, whether it's a strength trade, a pullback trade, then it will take the rules based off of that signal. All right, Bill? Excellent. Margaret says here about stops and targets. Once I'm usually in and out, and the stops are automatically closed out, Margaret. So I don't move my stop. I just close out the position completely. You got it, Oli. You got it, Sam. Have a good day, Sam. Email me if you have any questions, okay? Okay, so Atlas line trade, not too bad. Let me see, where is the Atlas line here on a euro chart if you trade currencies, right? Some of you like to trade currencies. Here is the double bar short giving me on the euro. So the entry is here. The market is telling me at the moment I can make about 4 ticks, right? That's with the current conditions, again, right there. And so the market went down 4 ticks. So that's the signal on the euro. And now when this candle closes, you're going to see a long. And you're going to see the market go up. Well, I'm assuming it's going to go up, but it's going to give you a long signal. So I'm already prepared. If you do trade the euro, it's going to be long. 6-tick target, more or less. That's what the market's doing based off of this, right? 6 ticks. So there's no surprises. Targets, stops, trade management. Never jump in without a specific set of rules to get you in, to get you out, and to manage the trade. All right. All right, sounds good. So any questions first on what I covered in the beginning, which was the January effect? Everybody prepared for the market to go up this year? There's going to be great opportunities. Please don't pass them up. The January effect, I have a few videos. Just do a search on the YouTube channel for January effect. You'll probably see 5, 6 videos all throughout the year. So I've been doing this for 8 years, 10 years, putting out the January effect videos. You're going to see a ton of videos on that. The Atlas line. Anybody have any questions on the Atlas line? Great little indicator tool. Keeps you on the right side of the market. Long, or if it crosses below, short. Again, to tell you the reason why I like a time-based stop, you see, if my target was up here and I never made the target, and the market decides it's never going to get there, it's now turning around, why am I staying or still staying in the market and holding on to something that may never happen? Like I said, I entered for a reason. I want to get out if it doesn't happen. Small profit, I'll take it any day over a loss. Chris, it's the F8 on the shortcut. So if you go here to your drawing tools, Chris, and you come here to, it's called Fibonacci retracements right there. That's what I'm using for that. So the drawing tools or the shortcut F8. And when you first bring it up, it's going to have all the Fibonacci values. So double click on it and you can update it 0, 100, 50. Remember to right click, manage template, save over the word default. You're good to go. All right. Fantastic, Chris. Excellent. Glad to hear that. All right, guys. I have someone that's waiting for me here. I got to run. You have any questions? Shoot me an email. February 20th, we have a new class starting. Deposit of $500 gets you the at the open. So those of you who are interested in the at the open method, you can get it immediately with the $500 deposit in joining the group mentorship class on February 20th. Email me if you have any questions. I'll send you the syllabus week by week, what we're going to cover. It's all inclusive, so there's no additional fees. Any costs involved with it. It's just a one-time fee. You got it, Carol. Have a great rest of your day. Be safe out there. Oh, fantastic. Kenny, glad to hear that, my man. Good job. The training is live, Tom. So I meet with you live. Either if you're looking at the group class, there's set days and times. 6 o'clock. I believe it's, if I'm not mistaken, it's Tuesday and Thursday at 6 o'clock, and it's live and it's recorded. And you can always email me in between classes, after class, before class, send me charts. So it's a live training with me. The one-on-one, the private mentorship, it's just you and me. We set our own dates and times for the classes. You can be twice a week, it can be 3 times a week, it can be once a month if you want, or once a week. And the private classes, it's a little bit more expensive, but it's just you and me on our own schedule. The training is recorded. Yes, if you can't make any of the classes, they're all recorded. You get a login, which is your own username and password, and you log in after the class is over to review the live class that I just had. Usually it takes a few hours to get put on your video account, but everybody gets their own video account, and whether you have an iPad, an iPhone, or computer, you can log in and review the classes if you can make it, and then you can email me if you have any questions. But usually I like to go over things multiple times, so you're going to see, a lot of review after I do. If you can't make any of the classes, it's really not an issue. A lot of people can't make the classes because they work and they just log in to see the training session. Okay, guys, have a great day. Hopefully you guys got to learn a little bit, see a little bit. Feel free to send me an email or call me if you have any questions. Take care. Bye-bye now.